30 minutes to the all-important speech of the Finance Minister presenting the vote on account. But before we put the spotlight on macros, let's address the 5 most important things that market really will be watching out for. There's enough that we've spoken about expectations, but 5 things to watch for. First, more importantly, has the Finance Minister been able to meet the FY14 fiscal deficit target? 4.8% is what he had set. Has he met the target? Has he bettered the target? That's the most important thing the market will watch for. After that, the market is going to keep a keen eye on the borrowing program. FY15 government borrowing target. What's the target that he's going to set? Market is expecting about 6.2 to 6.4 trillion. Is it going to be better than that or not? That's the second thing that the market will watch out for. After that, the market is going to keep a keen eye on the FY15 GDP outlook and the fiscal deficit target that the government sets. Of course, the new government can well come in and revise that target, but the market will keep an eye out for these 2 targets as well to get a sense of what are the numbers that the government is working with. After that, the other factor that the market is going to be keenly watching is a possible tweaking on gold import duties. We've seen jewelry stocks in focus in trade today. That may well happen. If it happens, what kind of an impact could it potentially have on the current account deficit and as a consequence on the rupee as well? That's another thing that the market will watch out for. So those are the key factors. There's one more factor, which is of course the extent of subsidies rolled over to FY15. Swami has been saying for a while now that the government might meet the fiscal deficit target through a bit of a smoke and mirror. A lot of the subsidies could be rolled over to FY15. So we need to keep an eye on what is the extent of the subsidy rollover that happens. Maithili?
Well, Subir, let's move on to Subir now and get a few of the macro perspectives once again. Subir, what do you expect from the vote on account? What are the 2 numbers that you're going to be looking out for, the fiscal deficit and the gross borrowing target? What is your take on both these?
I think the fiscal deficit for FY14 is an important number because it tells you how effectively the government has been able to meet its targets. How much more or less revenue has it collected than it planned, which also gives you a sense of the state of the economy, because the revenue collection is closely related to how the economy is doing. And also how much more or less did it spend than it budgeted, which could have both positive and negative implications. It's positive because you're saying you didn't spend on certain things that were wasteful, but it's negative if you didn't spend particularly on capital expenditure, on asset creation, which is a setback from the growth perspective. So you get a lot of reading, a lot of a sense of how the economy is doing and what the government is doing to either help it or hurt it from the FY14 numbers. I wouldn't put any stock on the FY15 numbers because the budget itself, the vote on account is only enabling exercise. No projections are being made that have any relevance or meaning. Until we have a full-fledged, legitimately voted budget in place, we can't really make any judgments about the financial implications of the budget. And we'll have to wait for 4 months for that.
Chetan, what are you expecting from the Finance Minister, especially on the fiscal deficit? Do you think he'll stay within the red line? Will it be less than 4.8%? What's your sense?
Well, there's a very high chance that the Finance Minister presents a number which is showing fiscal deficit of around 4.8% or 4.7%. But what we would say is that the underlying fiscal deficit has still, we think, not corrected completely. We would watch the trailing data for the true action on fiscal deficit. If you look at the trailing data as of December 2013, the 12-month trailing fiscal deficit for the central government is at 5.4% of GDP. So we reckon that fiscal consolidation effort is still not there as yet, and we would watch the actual data rather than what the Finance Minister would present in the budget.
Chetan, do you expect him to emphasize once again on fiscal consolidation? Do you think the fears of a rating downgrade, especially if a new government is not able to strike a balance between maintaining a tight fiscal policy and delivering on the growth and delivering election promises, how do you think he's going to work that out?
Yeah, I would think so. I think the rating downgrade risk is still pretty much there. It is not yet gone away. And I think we again would watch it in 2 steps. One is what is the outcome of general elections. If you get a stable, strong coalition government, then the rating agencies will be more patient to watch what the government is actually doing. And our hope is that if there is a strong and stable government, most likely you will get that fiscal consolidation action, which will keep the rating agencies away from downgrading the rating for the country.
It is a bit of a question mark, isn't it, Punita, the way he achieves the fiscal deficit target. And one gets the feeling that foreign investors can possibly see through this so-called adjustment that he's doing as far as rolling over subsidies to next year, getting one PSU company, taking money from one arm of the government and passing it on to the other arm of the government. I'm sure foreign investors can see through that as well.
Yeah, why just foreign investors? I think all investors can see through that. I mean, it's really pushing the problems to the future governments. Now that could be UPA, that could be NDA, that's still to be determined. But the fact is, yes, you probably are going to see him meet the 4.8% and come out a little better than that. But really, the question is, how many of these expenses are being pushed out to the next fiscal year? And if you look at so many of the companies in the corporate sector, how many of the companies are not getting payments from the government? There's just huge amount of government receivables that are being piling up. There's just, the government is really, no one's really going to be impressed by them actually meeting this red line, in my view.
And if I do a quick market check, currency, the bond market and the equity market, currency market is flat, equity markets are not going anywhere, and bond markets also are not volatile at all, which just tells you, and let me once again emphasize that none of the major market or market participants are expecting anything big from today's vote on account. So it's good that expectations are not there. The scope of disappointment may not be there also. Subir, many experts which earlier expected FY15 to be a better year for growth are now losing hope. Are now expecting that for FY15 we could have a growth number of anywhere between 5 to 5.5. Do you concur with the mass majority?
I think that in many ways we are in a situation comparable to 1991, which is that while the economy may stabilize at somewhere close to the growth rates that it is experiencing now, maybe slightly higher, maybe slightly lower, but to make a big leap to get back to a higher trajectory, we need to address some very, very critical structural problems. And this can only happen if the new government, whoever forms it commits to a significant reform agenda, a reform program. So otherwise, if it's business as usual, then growth will be somewhere around, maybe 1 year will be good because of some positive global factors or agriculture or whatever. Another year will be bad because these factors reverse. But we're not going to break out of this trend without addressing structural problems.
Swami, Subir just talked about the structural adjustments that are necessary. What are the kind of structural adjustments that the government could have done and it has failed to do to date? And how much of a price will we pay for that?
As I would say, when Chidambaram came, it was perceived as saying there's a lot of paralysis of various kinds, partly on the political, partly on the bureaucratic side. Politically, he was given a green signal to go ahead with things like, FDI and retail. It was supposed to be a signal. Over and above that, they thought that if you get a cabinet committee on investment, if you get a large number of these clearances simultaneously, we will then be able to take off and that period of paralysis will be over. That has turned out to be not the case at all. And we still have a situation where we just don't see orders for capital goods. We don't see orders for construction on a mass scale at all. So what's really happened is a new license permit Raj has been created without people realizing it. Issues like environment, forests, tribals, and the land acquisition, 4 main things. Plus, I would say a certain amount of Supreme Court intervention. How are you going to break through? Earlier on, what was really happening was that people paid bribes and got the clearances. In the new anti-corruption mood, you can't just pay the bribes and get the clearances. How then do you get through? How do you get a situation where all these lakhs of crores worth of orders translate actually into action on the ground? One idea, I think, is that of deemed clearances. They say that there's a deadline for each clearance, and if somehow the bureaucrat or the agency has not cleared it, it will be deemed to be cleared. That could be a rapid way of getting through. Again, there could be a series of exceptions to the existing rules. For instance, they are saying that where it's a linear project like a road or a canal, you might say, well, I will waive the things and I'll be able to expand these. You can have automatic expansion for some things like mining. So I said we need some automatic mechanisms which get things going. This, I think, can get things done in the short term. Beyond that, we really need to revisit all these rules. We have far, far too many regulations. The sad truth is that India is a country where the environment and the forests are in a mess. All kinds of rules and regulations are being violated. But the answer to non-implementation of existing rules cannot be to create more and more rules. Unfortunately, that has been the attitude till
Swami,
now. So we need far fewer regulations well implemented.
Swami, just to interrupt you then, if you were to take care of the point that you were making earlier about the fact that there are way too many rules and all of that, nothing can change overnight then. The market seems to be pricing in the possibility of, say, a BJP-led government coming and, and almost as if Narendra Modi has a magic wand with which, everything will improve. Then in your assessment, will things change drastically? And as a consequence for FY14, what kind of GDP growth should we be looking at? FY15, I'm sorry.
I would say that if Narendra Modi comes, he is going to probably be faced with a relatively good external situation. I mean, world GDP growth having fallen for 3 years, I think looks like picking up. So he's going to be lucky enough to get this bounce anyway. The second thing on which he's going to be lucky is that the world food prices have crashed. Wheat and maize have really gone down very, very sharply. That is going to help to tame inflation. So I would say the new government that comes is going to be a lucky government on a good wicket as far as the international trends are concerned, which can immediately, therefore, give you some bounce. Over and above that, I said in terms of actual actions, provided you have some things which are deemed and, you say just go ahead, go ahead, go ahead. I think some acceleration can be achieved, although it will be gradual. It will take time to overcome these things. But as I said, given the favorable international atmosphere, plus a kind of new confidence, climate improving, I think if Modi comes, we could see a significant bounce of growth up to 6%.
Okay, I just want to mark two groups where relative expectations are high. One, of course, is autos, where there is a case that excise duty, they need to come down. But look at auto stocks, Maruti, Bajaj Auto, Mahindra and Mahindra, Ashok Leyland. None of the auto stocks today are trading with a positive bias. So it's important for me to underline that there is no euphoria, there is no excitement. So the scope of disappointment, of course, would be less. And then jewelry stocks. Even if markets believe that, custom duty on gold will come down, jewelry stocks should be mighty excited in anticipation. But barring a percent here, a percent there, 4% for Gitanjali Gems, 1.5% for Manappuram, about 1.5% for Titan, there is no real price excitement in any of the big jewelry stocks as well. Volumes are there, but price action is missing. Ashwini, do you think for a pure trader, a positional trader, Titan could be an interesting stock to buy before the event?
See, Titan I think is going up because gold has bottomed out around 1200 USD. I don't think one way or the other, the uptrend in Titan will get vitiated because of what finance minister does or does not announce. So I think other stocks may have different dynamics. They are in downtrends, but it appears Titan is bottoming out. So that is about the only, gold stock that you should consider.
Chetan, what about the borrowing program? What is your number? What are you looking at as in terms of the total borrowing for FY15?
Well, as far as the growth forecasts are concerned, we are at 4.7% of GDP growth for March 2014 and 5.2% for March 2015 financial year. On your question on the borrowing program, I don't think anybody is keenly watching borrowing program right now. I think everybody is keenly watching first what is the political outcome. On the day on which the election results come out, people will automatically start imputing what will be the trend in fiscal deficit depending upon the constitution of the government. So I would say the more important event, everybody is focusing on the outcome of elections rather than the borrowing program.
Punita, would you agree with that the market is going to be focusing more on the outcome of the elections than the borrowing program, because there's only so much of credibility that you can attach to this borrowing program given by the government, because it may not come back to power?
Yeah, I think the markets have not just the election outcome. I think the markets are going to react to a number of global events as well. I mean, what's happening in other emerging markets is very important to India as well. And so the vote on account is just going to be one more event, some more data, just like an earnings of a company come out. And it's more like a report card. There'll be some reaction, but not a whole lot. I think immediately the market focus is going to shift back to what is happening to tapering, what's happening to other emerging economies, what is happening to, of course, what to expect from elections. So I think it's going to be business as usual.
It is business as usual today as well, because good old IT and pharma stocks, which have got nothing to do with the Chidambaram's maiden vote on account, are doing well. Look at Dr. Reddy marching towards an all-time high, and HCL Tech, even at higher levels, it has only got takers. I want to mark first the 2014 graph for HCL Tech just to establish for our viewers that this is the power of leadership and how good that stock has done in this year. 2013 stock was up 100%, and this year it is up 20%. It's no joke. It is a nifty 50 company which has appreciated by 20%. But Chetan, let's move away from IT and talk about your view on rupee and the quality of improvement in the current account deficit. Do you see rupee coming under pressure given that tapering could have an impact on emerging market currencies?
We think that the rupee is now in a much better position because India has managed to control its current account deficit. So we are not unduly concerned about the rupee depreciation risk. And rupee is also more on the fair value range based on real effective exchange rate with CPI inflation as the assuming deflator. So we think the rupee is likely to be more or less remaining stable. The risk, however, will be there that whenever you do get a contagion from the rest of the EM world, you could have some downward pressure, but Indian rupee should still do relatively better than other emerging market currencies.
Mm-hmm. Maithili, a quick take from you as well. If the market is working with the assumption that there could be some tweaking of gold import duties, now, given if it were to happen, what kind of an impact could that have on the current account deficit and as a consequence on the rupee? Because there's some nervousness that the pressure could be back on the currency. What is your view?
Well, I think this would rather be a function of what's happening externally, because if the pace of the QE tapering intensifies, and there is strong rumors that the entire QE will be phased out by the end of this calendar year, in that case the impact of that would be far, far greater than anything that you do on the gold front. So I think on the external front we still have reason to be very, very nervous.
On the external front we still have reasons to be nervous. Swami, would you agree with Maithili's take that even if they were tweaking on gold import duties, it's not the real factor of concern as far as the currency is concerned? It's the external front which could cause much of the nervousness for the rupee through the course of this financial year?
I would agree with Maithili that as far as the volatility is concerned, it would be important, but it's not necessarily just downhill. I mean, it can go downhill and then revive again. But yes, without doubt, the problem of a sudden stop, the problem that we may be affected by contagion, I think that is very much a reality to be taken into account. I would say, however, don't get too much taken over just in the question of volatility. The more fundamental underlying trend, if the world, I mean, if you get the tapering finishes and you exit from QE, in some sense, it's an indication that the US economy is picking up well and the world economy is picking up well. That is good for the real economy of the world and for India. So, while there will be volatility, yes, I would say that I see more hope than just risk in the global external environment.
Swami, you spoke about how the US recovery is good news for India, and it certainly is good news not only for India but all over the world. But that is good news in the longer term. In the short term, the lack of liquidity will hurt markets, and particularly markets like ours, given that there will be an element of political uncertainty also. How do you think both these two factors will really play out?
It depends, I think, a lot on what happens in the election. If we get an unstable looking third front government, I can see a lot of sinking hearts. I can see that the risk factor on India going up a great deal. And if you have the risk factor on the political side, combined with, as you say, emerging markets contagion, you can get a lot more volatility, a lot more problem. I think it will be much less if you get a BJP-led government with a substantial, comfortable majority. So it will depend on what happens out there. So it's this combination of the external factors and what happens domestically, that's going to make a huge difference. Let's see what happens.
Let's talk about flows. And foreign investors have been more than just fair weather friends. We've got $20 billion, which is a record number for 2013. Unfortunately, because of global tweaking, flows are not there. Do you think flows will come back again once we have a good government in place?
Well, I mean, I think, again, keeping flows in context, all emerging markets have seen outflows, and India has seen outflows as well, but maybe not as much as some of the other emerging economies have seen. I think right now the expectation, if you just look at, first of all, we had a pretty good earnings season. I think earnings, despite the macroeconomic situation, have been pretty good. In fact, margins have expanded in a number of companies. So that's kind of kept the foreign investor and investors still in the game, in the markets. And I think right now, if you look at earnings estimates across emerging markets, there's still a lot of downgrades happening. But for India, the earnings expectations are sort of showing an improvement, not really showing an uptick, but the downgrades are flattening out, which means that everybody's anticipating a better 2015. And I think that's really where the what will determine what happens to the flows, what happens in the elections, and then how the companies, whether the economic situation is going to be very, very important.
Puneeta, a quick word on the current account deficit, because about 6-8 months back, that was a big concern, wasn't it, for the market? Everyone thought we were going to be staring at a current account deficit way above what was projected, and the government has had a fair degree of success in in bringing that down. How much of a relief is that to market? And do you think fundamentally, because we haven't done much to improve our competitiveness, the overhang of a weak current account deficit is going to continue to haunt us through the course of FY15 as well?
I mean, I think the current account deficit has definitely come in better than where one would have thought a year ago. But again, keeping in perspective that the current account deficit of India still remains one of the worst compared to other emerging economies. I think what has really helped has been the export sector. And the rupee weakening has actually been positive in that sense, that a lot of companies have been able to export, and that's really helped the current account deficit. And therefore, even today, you're seeing, why is IT or pharma doing well? It's mainly because of two reasons. One, the US economy and the developed economies are recovering. And the second is that, the weaker rupee makes their business more competitive. So I think if the rupee strengthens from here on, that might not be so good for exporters. And that might again kind of deteriorate the current account to some extent. And then what happens to oil and oil prices? I mean, I think those are very important factors for the current account deficit. I don't think it has much to do, it has much more to do with the economy and less to do with whether it's a vote on account or even, with elections. Those are very temporary fixes for these measures.
Okay, let's look at the market. 10 minutes to go, and then the finance minister is expected to rise on the floor of the parliament to make his maiden vote on account speech. Markets are absolutely flat. 2004, when the vote on account speech was presented by the NDA government, markets did not do anything. However, in 2009, markets were expecting that there would be a huge stimulus package which would be announced in the vote on account speech, because that also coincided with the global crisis. After the vote on account speech, markets came down. But today, expectations are precious little, so it may just end up becoming a 50 to at max a 100-point Nifty event. Swami, for a stock market watcher, should one be excited about the better management of CAD or the fact that our fisc is under control?
The current account deficit, I would say, is the most impressive achievement of the last year. It looked to be really the Achilles heel. And the fact that from something like 4.8%, when it came down in one quarter to 1.2%, I mean, it's a dramatic change. Not only that, we had simultaneously Raghuram Rajan devising this particular swap window, whereby a lot of short-term money could come in, sorry, not short-term money, a lot of money could come in very, very fast. High interest rates, no doubt, because of the RBI guarantee given. But you showed that very, very quickly, you could get as much as $30-odd billion in. And this is repeatable. In a future thing, once again you open that window, that money can come in. So I think the combination of the demonstration of India's ability to quickly pull in money and the fact, it may just be a coincidence, that from July onwards, suddenly exports began to grow at double-digit rate, buttressed by this depreciation of the rupee. So I would say the current account deficit improvement is the most dramatic. The Raghuram Rajan idea of a swap window, even more dramatic. Nothing in any of the other emerging markets, I think, rivals this huge turnaround that India managed to achieve. Because of this, while India is now included very often by some people in what's called the fragile five, I would say it's no longer fragile or no longer particularly fragile, not comparable with them. That, I think, is the big plus for the economy in what has been achieved in the last year, though I regret to say on growth and inflation, you didn't achieve very much.
And that's unfortunate, isn't it? Probably the voter is going to judge this government just on those two factors, isn't it, Swami? But 5 minutes to the budget, to the vote on account speech. Let's put the spotlight back on the 5 things to watch for. This is important if you're an investor, if you're a trader, if you're a corporate. The 5 most important things that you should be looking at from the finance minister in the vote on account address. First, most importantly, FY14 fiscal deficit target. Has the government reached the target of 4.8%? Expectation is that it's likely to better it. More importantly, how has it done that? Has it passed over some subsidies? That's going to be a key factor to watch out for. Then, for the bond markets, especially FY15 government borrowing program, of course, much of it could be changed once a new government comes in, but this is an important number that the market will keep a close eye on. Expectation are that it could be around 6.2 to 6.4 trillion. So we need to keep an eye out on that number as well. FY15 GDP outlook, that's important. We're going to close this fiscal with about 5 or under 5% growth. What about FY15? Is it likely to go up to 5.5, maybe even more? What is the government expecting? And also on the fiscal deficit front, is Chidambaram going to settle for 4.2 or lower? Tweaking gold import duties, that's jewelry stocks are in focus in trade on the back of an expectation that gold import duties could be tweaked in the budget. And of course, finally, the extent of subsidies rolled over to FY15. We spoke about it earlier as well. How much of the current year's bills get passed on to the next government is something that we need to watch out for. This will take some time to trickle out this information as well. Maithili, I know we speak a lot about equity markets, but bond markets are also going to be keenly watching the speech, especially the target set for next year as far as government borrowing is concerned and the fiscal deficit target.
Well, absolutely. And the finance minister is a consummate political animal. So he's really going to be looking at the number and pitching a number which he thinks the markets will react very positively to. But the fact is that one has to take that number with a pinch of salt. So at best, bond yield should react on what is the borrowing calendar that the RBI comes out with subsequently. Because this number that he has for FY15, any new government is bound to change it. And given my suspicion of how the finance minister will roll over expenditures and maybe over budget as far as revenues are concerned, I think nobody will take that annual number very seriously. But what the RBI subsequently comes out with his borrowing calendar for the first 4 months, yes, that will be watched very carefully. And to the extent that he budgets a very conservative fiscal deficit, yes, they will react positively to it.
Swami, would you agree with Maithili? Do you think the finance minister is likely to come up with a really ambitious fiscal deficit target for the next financial year? Because chances are he wouldn't have to meet it.
Well, as I said, what do you have to lose? So I think Maithili is dead right. I think he'll come out with a very optimistic figure. I don't think the markets will be particularly enthused by that. But nevertheless, he will do his bit.
Subir, Mr. Chidambaram is under a lot of pressure from his party to announce some freebies. Does he really have any elbow room, especially after the Spectrum auction bonanza? Does he need to do it at all?
Well, you have many government spokespersons or ruling party spokespersons basically saying they don't accept what the polls tell them. So if they are reasonably expecting to be re-elected, to be in some fashion part of the next government, then it would be very destructive, very self-destructive for them to inherit a fiscal situation which they have done damage to in their last budget. So there is an inconsistency between this view that you can use the budget to do all kinds of things which can do fiscal damage, and their expectation that they might actually be part of the next government. So I think that's a naturally disciplining factor.